repo rate remaining unchanged at 3.5%. I'm joined by Dr. Christy Viljoen. He's an economist at PwC, Annabelle Bishop, chief economist at Investec, and John Manike, the head of financial education at Old Mutual. Thank you very much to all of you for joining us. But I'm going to start with you, Christy. Of course, interest rates left unchanged. Do you think this perhaps was a missed opportunity by the Reserve Bank?
Well, I think this was obviously generally as expected. Most economists were expecting no change in the repo rate. I think there's always going to be someone that argues for lower interest rates, and it's always going to be a benefit to small business, to households, for example. But I think what the Reserve Bank has done, it's created that balance between giving lots of support to the economy without going too far. We need to remember that it does need to keep a certain level of interest rates to ensure that the rand retains its strength and that there is still attractiveness for investment. So for me, quite as expected, and I don't think there was really room for them at this stage to make additional cuts, to be honest.
Annabelle, very interesting that the Reserve Bank governor indicated that the growth forecast for 2021 had actually risen to 3.8% as opposed to 3.6% in the January meeting, and yet they keep on talking about how there's so many threats, not to mention the load shedding that we've been experiencing. Your thoughts there?
Certainly. Look, I suppose it is closer to consensus, but the reality of the situation is we don't know so early in the year what the GDP outcome is going to be. And of course, we don't know what's going to happen with the multiple waves of COVID-19 in South Africa and, of course, the lockdown restrictions that occur. South Africa's vaccination rollout has actually been very slow. We're only on 200,000 adults out of a population of 40 million, essentially adults. And I think, the problem here is, well, I suppose, 40 million really is just 2/3 of the total population. The concern here really is that if this very slow vaccination process continues, it will have a negative impact on economic growth as you see further lockdown restrictions and, of course, multiple waves. That's not our expected case. We're hoping it does speed up. And, of course, the minister announced a great flood of vaccines to come in late in the year. But, the economic growth outcome for this year and indeed for next year will be significantly impacted by the vaccine rollout.
So, John, in terms of the interest rate remaining flat, obviously, many of us who may have debt would have wanted an extra cut. That doesn't seem to be forthcoming. The Reserve Bank talking about possible increases in interest rates in Q3 and Q4. But given this reality, what is it or how is it that consumers need to be behaving in a very uncertain world?
Environment generally translates into higher borrowing. People tend to borrow more. But I think what's important here is what you are borrowing for. Obviously, there's good debt and there's bad debt. I mean, wise people would borrow money to actually invest and to create wealth. If you're borrowing money to do alterations on your home, if assuming it helps you, the value of your property to appreciate, then you're probably doing a good thing there. But I think there's an opportunity here to ride the wave of the low interest rate by paying more in order to pay your bond faster for those who've got mortgage, any other type of debt. If you can charge down that debt, you're actually doing the right thing at this point in time.
Christy, in terms of the inflation forecast, of course, a couple of reasons that they're quite concerned about major risks are electricity and the oil prices. We know that electricity prices are set to go up from the 1st of April, for most of us from the 1st of July. How concerned are you about these risks, and do they tally with the bank's inflation forecasts?
The central bank is usually quite good with its inflation forecasts. So I'm probably not going to nitpick any of their specific numbers. But yes, there are quite real risks to inflation at this stage. We know oil prices have increased in the past few weeks. And I guess the longer we have that big ship blocking the Suez Canal, the more pressure there will be on oil prices in the weeks ahead. We know there will be a significant fuel price increase in April. We know electricity prices are going up April and July, depending on where you get your electricity from. So these are obviously concerns in terms of energy prices specifically. We know that the current inflation number is quite low, partly because medical insurance inflation has been low. But we also know that companies that have held back on lifting their tariffs will probably do so by the middle of this year. So there are real risks that inflation could edge higher. And I think where this is of concern is not necessarily by the big amount of interest rate increases that could happen, but how soon we can see a start to interest rate normalization. Ideally, I think most of us would like to wait for a long time still, but the Reserve Bank does need to start getting towards that point. And I think that the decision this week, where all the members of the MPC voted for a hold, is already an indication of a change in a mindset. We've seen at the past 4 meetings there hasn't really been a consensus amongst MPC members, and it does appear that they are closer now together on agreeing what the next steps are. And as they've warned, the next steps will be an increase in lending rates.
Annabelle, there's a lot of talk globally about higher inflation in the developed world. And we do know, as much as the Reserve Bank says that it looks at all the factors, it is to some extent influenced by international monetary policy, particularly from the Fed and the ECB and the like. To what extent do you think we need to be worried that our interest rates may come up sooner just because of what's happening in the international scene? But of course, we do see that the Fed and the ECB are keeping rates unchanged and continuing to provide that support through QE.
Yes, look, I mean, the Reserve Bank has in the past said it doesn't predicate its moves on the back of the Federal Reserve Bank in America. But of course, the points that you make are very valid. And, obviously a dovish global environment is supportive for South Africa, not just from a liquidity perspective in terms of inflows into our currency, which in turn obviously is helpful, into our portfolio assets, which is helpful for the currency. And then, of course, obviously inflation. But, the reality is that a number of emerging markets have started to hike their interest rates. And I think we need to be mindful of the fact that we're going to be going into a situation now where we're going to be really from the month of April being impacted by the low base of inflation a year ago. CPI inflation is a year-on-year measurement, and CPI in 2020 dropped, to 3% in April, down to 2% in May. And this base effect alone is going to push our inflation rate up quite substantially in the second quarter of this year, leading likely to those interest rate hikes. So I think, the Reserve Bank again will have to strike a balance of what is happening globally and what is happening domestically. The reality of the situation is that very high commodity prices globally tend to also push through pressures on inflation. And, the risk further is that in May, you do tend to get a foreign investor sell-off. It happens quite often every year as you get elevation in market risk aversion in the middle 2 months of the year, often known as a sell and may and go away effect in equity markets. That in the past also put some pressure on the currency. Also, don't forget we have significant electricity hikes coming through as well. So all of these factors combined, I think, are going to put the Reserve Bank in a position where it would probably like to not hike interest rates, particularly given the weakness of the economy, but it may have to start doing 1 or 2 incremental lifts, not just, to align ourselves with what's happening in global emerging market economies, but also, of course, as well to take cognizance of the development of South Africa's own inflation trajectory.
Okay, we're going to leave it there just for a moment and go for a quick break, and we'll continue the discussion thereafter.